China Unicom, one of the country's 3 state-owned telecom carriers, is undergoing a mixed ownership reform where it will sell some 6 billion shares to introduce strategic investors. It is offering 35% of its Shanghai-listed arm, China United, to more than a dozen state and private investors, including tech giants Alibaba Group, Tencent Holdings and Baidu, to raise almost 79 billion yuan. What exactly is a mixed ownership reform? Why is China Unicom launching it? And what are the challenges for the future? To discuss these questions and more, I'm very happy to be joined in the studio by Andy Mock, Managing Director of Red Pagoda Resources, and Shen Yiyang, Senior Consultant of Asian Development Bank, will join us in the second half. That's the topic. This is Dialogue. I'm Yang Ray. But first, let's take a look at this background report.
China Unicom confirmed that China's second-largest wireless operator would issue a maximum of 9.04 billion shares at 6.83 yuan per share to 9 private and state investors via private placement. The purchasers include internet giants Tencent, Baidu, Alibaba, JD.com, and insurance giant China Life. The company's Shanghai unit will also grant 85.8 million shares to employees and another 1.9 billion shares to the China Structural Reform Fund Corporation. This round of private placements total 42.6% of the company's total shares.
China Unicom's deal is really an example for China's future mixed ownership reform plan, both from the standpoint of private placements and of pricing. One of the important points in the mixed ownership reform plan is that it is to promote corporate efficiency and to protect state-owned assets. So this plan has been put together very thoughtfully. If the percentage of a private placement is low, it actually has a bad effect on the deal. I think the private placement regulations are likely to be amended.
China Unicom is one of the largest mobile carriers in the world and was among the first state-owned enterprises to implement mixed ownership reforms. What difficulties could it face in the future?
Well, Andy, the deal in which Unicom's Shanghai-listed unit will tap more than a dozen major investors, including Alibaba Group, Tencent Holdings and Baidu. The issue is why, for example, let's look at the stock market. There's a surge in the confidence of the investors. The performance of the stock market seems to be a sweet surprise for those who want to see success of Unicom's mixed ownership reform. Why do you think people have shown their optimism?
Well, I think the optimism has 2 parts. The first is looking at Unicom itself, which is one of the largest mobile operators, not just in China, but in the world. So by bringing in this mixed ownership structure, particularly market leaders like Baidu, Alibaba, and Tencent, I think what investors are saying is that they believe that this can work, and it's also a positive more broadly for the overall restructuring of the Chinese economy.
But let's look at composition of the board of directors. Only 4 seats out of 15 have been granted to the private investors. The issue is who will exercise the veto and have the final say about most of the principles concerning governance of the company?
No, that's a great question because, I mean, board composition is one of the most important corporate governance issues. So there are 4 directors from the investors. I believe there's also 5 independent directors as well. So if we look at it that way, just on numbers alone, out of I think 13 total directors, that the independent directors and the actually comprise a majority of the board. But I think that's actually looking at it a bit too simply because we know, of course, too, that such a important company to the Chinese economy and to the country as a whole, the party and the government still will exercise, I think, an important influence in key decisions in how the companies run, irrespective of the number of votes of outside directors.
I believe many more challenges are lying ahead since this is a bold reform initiated by the NDRC, the top economic planner of the country. Having said this, why don't you help us review history of the mixed ownership reform that was first inaugurated 4 years ago in China. How's the development?
Well, I think, to put it simply, it's all about economic efficiency, because historically SOEs, the state-owned enterprises, have operated not for profit maximization or perhaps even economic efficiency, but really to serve as kind of the danwei or the iron rice bowl historically before economic reform. And then with the launch of this new ownership scheme, the intention is to introduce a greater responsiveness to market signals, as well as a restructuring of key enterprises in the economy to make them more efficient.
But to be more realistic, Andy, how do you look at the adversity of such reforms? Because the SOE has always been billed by observers as a very strong lobby group and an interest group which refuses to be reformed. That's a matter of how to redistribute the stakes and the interest. That would, of course, undermine the vested interests of the lobby group. What do you think of the concerns?
I think they're absolutely valid, and they're not to be underestimated, because, Yang Rui, as you're saying, there are political vested interests that stand to lose if these reforms are successful. But I think just from the mechanics of it, to use management consulting speak for a second, this is an enormous change management project. So you look at any large company, an IBM, a General Motors, that are pure for-profit enterprises. Even companies like that struggle with these kinds of major changes.
In the United States, we have the popular assumption of a too big to fail, despite the devastating disintegration of some of the giants in the immediate aftermath of the financial crisis back in 2008. Because of the antitrust law, and Microsoft fell apart, fell into two divisions. Do we have a similar legislation here in China to prevent monopoly and to introduce the antitrust law that we copy from other industrial nations?
Well, if we're looking at it from a perspective of market competition, I think we can see that that has been a guiding principle for the party and the government. So we look at, in the telecom sector, there was China Mobile and then China Unicom, and then with the introduction of China Telecom as a third major participant in the market space. And then now we look at these new operators that are, we can think of them as the downstream suppliers of the big three. So I think the government is looking to foster greater competition in all of these markets that previously were monopolies or duopolies.
Do you see such reforms more as a top-down political will or the other way around? We've been discussing the reluctance and adversity of such reforms coming from the state-owned enterprises themselves, the other groups. But what about the political will of this generation of the Chinese leadership, with Mr. Xi Jinping vowing to break up the interest groups, right, to really get the job done?
Well, President Xi, I think by many accounts, both by Chinese domestic observers as well as foreign analysts, is seen as one of the strongest leaders in China.
Since perhaps Mao Zedong.
Mao Zedong, Deng Xiaoping. Yes, so both, I think, the clarity of the vision, personally, I think that he has articulated, to his ability to, I would say, consolidate power and control over the vast government and party apparatus, I think really has been quite remarkable and surprised, I think, many observers. Now we're coming up, of course, into the end of his first 5-year term. And I think many people have been surprised.
However, this process of attaching more importance to the role of the market forces itself has been pretty difficult. For example, what do you think of the relationship between the government and the market, the visible hand and the invisible hand? We have a very different set of political institutions that do not encourage shock therapy or thorough privatization of the state-owned enterprises, which are largely characterized with, as you said, poor efficiency, lack of transparency, and no reward as the driving force to deepen the restructure the flawed state-owned section. What do you think of, say, the relationship itself?
Well, I think if we look at a country like the United States, where at least, well, I think we need to separate. The rhetoric is actually different from the reality. So if we look at, say, the U.S. with the two political parties, the Democrats and the Republicans, the rhetoric is very, very different, but at least from a more centrist perspective, the differences in reality are not that great. I would say in China, of course, the state is primary. So it is a state-led economy, but with the market playing an important role, whereas in the U.S., where we say it's a purely market-driven economy where the government plays a supporting role.
But I'm afraid neoliberal economic ideology is beating a retreat since the campaign success of Donald Trump, and you could see the rise of populism based on this fear that too much of the market economic too much of the market forces will only wreak havoc instead of the other way around. Therefore, it's been a controversial issue about having a strong government regulation or intervention. What do you think? What are your thoughts?
Well, I think it's an important distinction to make between government regulation and direct intervention in the economy. Mm-hmm. And we can see that the Chinese model, I think, which in fact has largely been responsible for this rethinking of the traditional Western paradigm as being the right way or the only way to engineer sustainable economic growth and social stability. And even we can see in the U.S. now with Trump, some of the policies he's advocating for seem to be a direct copy of what China has done very successfully over the last 30 some odd years.
We've been hearing some critical voices coming from representatives like, all of them are liberals, such as Professor Zhang Weiying, Xu Xiaonian, and Mao Yushi. These guys have drawn a lot of fire from the conservatives for their scathing criticism about the industrial policies of the central authorities and governments at different levels. What do you think of their criticism?
Well, I think we need to separate a approach or philosophy from the execution of that philosophy. So a lot of people use the example of, look at Singapore, where the government is not just a strong regulator, but an active player in key parts of the economy. So look at Temasek, which some people would call a sovereign wealth fund. They think of themselves more as a holding company, and really it's Singapore Inc., in that it's owned by the Ministry of Finance, but they have meaningful equity stakes in Singapore Airlines, Capital Mall, which is a large real estate developer, Singtel, the mobile operator. And we look at where the philosophy and the come together, that this model can indeed work in Singapore as well as in a large country like China.
Thank you so much for raising the issue of comparing Temasek, a very big company of Singapore, with some of the state-owned enterprises here in China, because we are discussing whether the reform of the mixed ownership of Unicom, one of the three major mobile carriers in China, will be a success. So we'll be back in a short while. Stay with us. When we come back, we'll be joined by yet another guest speaker. Stay with us, please. Welcome back. Now we are very happy to be joined here by a second guest speaker, Mr. Shen Yiyang, Senior Consultant of Asian Development Bank. Welcome to Dialogue. I'm sorry for the poor traffic jam in the capital city. That's been a problem for Dialogue. We've been discussing a comparison between Temasek, a major company in Singapore, and the reform of mixed ownership, for example, Unicom. This is a case in point. What do you think of this comparison?
Well, I think in the Singaporean case, they have come to this from a long way, and they have a long period experience for this kind of mix, planning and operation. But in China, I think we still need to be cautious, and also need some time, I think, to be adapt to this kind of new business model, I think.
Andy has been briefing us about the frustrations and probably opposition from the stronghold, the state-owned enterprises. They are described by some overseas observers as the interest group that refuses to be stripped of their vested interests one way or another. What do you think of the challenges lying ahead?
Well, I think, first of all, I'm kind of optimistic for this reform, because a company like Unicom, they have a lot of resource, and this resource sometimes have a kind of monopoly kind of role. And also the efficiency of the company can be kind of improved if we can bring in, the partners from private sector, and also the other funds like pension funds and other partners. So I believe with the involvement of private sector, maybe some new kind of energy and also new model, new people can be bringing into this system. So it's like a 1 + 1, not just equal to 2, but equal to 3 or 4.
Here are the reasons for Unicom to be singled out as a pilot program in terms of the mixed ownership reform. Compared to most major SOEs, Unicom has a relatively simple and much less unlisted non-core business, and that allegedly has made it a good testing ground for corporate reform. What do you think?
No, I think that makes sense. Clearly as a test case, and there are many more companies behind Unicom that I think are going to follow this model. So I think the Chinese government has been very savvy in their pilots, whether that's Shenzhen or look at some of the projects with the Belt and Road, that being very, I think, thoughtful about picking the right pilot cases. And I think the corporate structure is one element, of course, but I think there are other factors as well that go into picking Unicom as the test case.
In the age of digital technology, of course, the Chinese authorities have been considering proactively how to upgrade the current network service from 4G to the 5th generation, and that will, of course, need a lot of non-public capital to be injected into the reform. What do you think of the benefits that Alibaba, Tencent, and Baidu might be able to harvest as a result of their being listed as shareholders in this very unpredictable process of reform?
Well, I think for Unicom, they have listed in A-shares and also as Hong Kong. So I think the structure is some kind of complicated. But if we look at the from the kind of general overview, so the kind of mixing, I think will bring kind of new dynamic people. Like for example, in the state-owned enterprises, the salary for the company CEOs and managers are much lower than the private sector. Mm-hmm. So in this case, a lot of new bloods can come into this this platform, and also the company like Tencent, they're already very good in the we call it new economy. So this web payment system and all these things, I think with the new platform of Unicom, it can be enlarged. On the other hand, if we can, in one hand, improve the how to say the benefit coming from the market, as well as paying attention on the public interest. For example, the state-owned enterprise have some kind of responsibility for the social welfare system. So the money by this state-owned enterprises somehow can go to the national budget. But after this mixing and reform, so we need some kind of structure. If we can arrange some structure or mechanism to make sure some of the new, earnings can go to the public, then I think it could be even better when we say design from the top.
One important aspect concerning modern corporate governance is the motivation for the senior management. Mm-hmm. And are you optimistic that such reform of the mixed ownership will help raise the salary of the senior managers on the state-owned side? Because against the background of anti-corruption campaign, salaries of state-owned enterprise managers have been cut by half, at least. That has led to the brain drain, which will be a devastating blow to the competitiveness of the SOE segment. Are you hopeful that this pilot program of Unicom will be a shot in the arm for those who are quietly considering quitting their job at the SOE and start working for the non-public sector? Because this is a bleeding wound, isn't it?
Well, I think that there is cause for optimism, first of all, with this mixed ownership structure, and in particular bringing in companies like Baidu, Alibaba, Tencent. It's necessary but not sufficient for the transformation of Unicom, or I should say the successful transformation of Unicom. Because I think what these investors bring to the table is they are, in a sense, the customers of Unicom. So they can provide the strategic level insight into what to do. And whether it actually gets done or how to do it then is the job of senior management. And I believe a part of this reform, while salaries might be cut, but also now there's also an equity component as well. So if we want to think about the alignment of interest between management and the owners, of which the directors represent the shareholders, that's generally recognized as one of the best ways to do that. So when the shareholders win, management wins. So I think there is cause for optimism, but again, there's a lot of question marks. Change management is very, very difficult. The larger the organization, the more that's at stake, the more people will fight back to protect their prerogatives. So I think we have to see, but given the track record of China's economic reform, the political will under Xi Jinping, I think there is room for optimism, but there are, of course, very, I think, significant challenges that have to be faced.
What do you think of the purpose of having more non-public capital being injected into the reform? We were discussing upgrading the 4G to 5G generation. Do you think this reform, the pilot program, will help pave the way for a drastic upgrading? What do you think of the prospects?
Well, I think the current government of China is very good on reforming. So before, the government is either judge and the athlete. So we're doing the two role of government, the athlete and judge. But in the future, I think the government will be more like a judge rather than athlete. So they are bringing more like new blood from the private sector, and the government's role need to be changed. And then in that case, the government could be more efficient. This is my personal view.
The counter-argument could also be convincing, allegedly. For example, what happened in the first 3 decades of China's reform was the separation of the party from the enterprises and the separation of the administrative intervention from governance of enterprises. But it seems at this moment everything is coming back. The party will establish its formidable presence in most of the enterprises. Even in the private sector, there got to be representation of the Communist Party, the ruling party. When you talk about your optimistic prediction on the efficiency concerning governance of the enterprises, some of the Western critics would argue the other way around. They don't know what's going on. They don't know the political realities here in China. In fact, one of the questions I raised a few years ago in the DC about the anniversary, commemorating the anniversary of diplomatic relations between the United States and China, I said, in fact, at the very beginning I asked, why was the Communist Party of China able to lead the Chinese economic reform so successfully, turning it into the second biggest economy within such a short period of time? And most of the audience there were left stunned. They didn't know how to answer this question, because ideologically speaking, they were always questioning the sophistication and the wisdom of the Chinese policymakers. So when it comes to the ideological front, do you think this will only add to the efficiency, or some of the concerns from Western skeptical viewers and observers will come true?
I actually am optimistic from a different perspective, and it's, there's concern about the party taking a stronger role, not just in domestic enterprises, but foreign invested enterprises as well. And I think one of the things that we've seen from a purely or more capitalistic system is greater income inequality, environmental problems. So if we look at this idea of in the West, it's called a triple bottom line. So you look at not just the financial returns, but also the returns from a social perspective as well as from an environmental perspective. I think one thing we can see with the greater party presence, which is a little bit different, as you're saying, the party becoming more of or the government becoming more of a judge versus the athlete. I think it's a little bit the opposite, that they're actually becoming more involved. But I can see that as a positive, in that ensures that these different interests are balanced. Because if you're a purely for-profit enterprise, particularly a publicly traded company, there's enormous pressure for quarterly earnings growth, and that then can result in other goals being ignored, or even making, harming the environment, harming society in the pursuit of profits. So I can see with this Chinese model, if we extend it, that this strengthening of the party through different parts of the economy could actually be a positive.
Thank you so much for briefing us on your note of optimism in reforming the mixed ownership, taking Unicom as a pilot program. Well, China has, unlike Russia, decided to adopt a gradualist approach in reforming its economy, and that proves to be a big success, despite all the controversies. I'll see you next time. Goodbye.